they still have that savings component that the government was quite concerned about. And when you talk about the Vancouver market, where you've got average purchase price on the crest of $700,000, there's 3 people in the house making the mortgage payment. And when you reduce amortization, it makes it even more difficult.
Definitely. How does that help? It does not help the economy. It really doesn't. I mean, there's just people that
it hinders it. It does.
Spending money otherwise. Now, with all this, though, of course, Suzanne, you've seen, well, you can attest, I would imagine, a lot of people are buying condos.
Yes.
And there must be a lot of challenges that come from condo ownership. A lot of people don't exactly know what they're getting into.
Most don't.
Is that the case? Is that through your experience?
Absolutely, yeah.
What would be some of the best advice you could give to a new condo owner?
Well, I think that the best advice to a condominium owner that's in the process of buying is to really review the financials carefully, to look at the operating budget, the reserve fund study. All of the financial information is really, really critical. A condominium is governed a lot like a municipality. You collect the taxes from all of the owners to pay for the common services that everyone shares. And so you look for things like deficit spending. Is there enough set aside for future replacements? And those all have an impact on resale value.
Of course, recently there's been some nasty, like special assessments.
Yes.
Which is such I'm a condo owner. It's a terrifying and ugly word. I've heard sums,
yes.
As high as $50,000 per unit.
Unheard of, yeah.
To me, it begs the question: are condo owners being protected enough, or is it really just a case of you need to be able to do your homework?
I don't think condominium owners are being protected enough in the arena of buying newer condominiums. The Condominium Act is under review right now, and I think one of the things that's very pertinent to the legislation as they're talking about it is how to deal with developer issues. I hate to say it, but the reality is that by the time a board gets into place in a brand new development and identifies what the deficiencies are in the common property, quite often the warranty period has expired.
Yeah, that's right.
And then they're chasing around after.
They moved on to the next province.
Although this month did see some changes. We'll talk about that briefly in a moment here, folks. We're going to jump to a quick break and check out the Rant Pack. Stay with us.
I think that home ownership doesn't provide the security it once did, especially now. We're living in really unstable times, I feel like. So to have a 25-year mortgage, to think of the ways you're going to pay your mortgage for that long isn't something that's appealing to people anymore. You can have an economic downturn or even floods happen, and then what do? So I feel like renting or other options like staying at home is just a lot more feasible for a lot of people these days.
If you have the opportunity to be able to buy your own place as a first-time homeowner and a young person, that's fantastic, but it's probably being financed by your parents or grandparents. There's no stigma to not owning. There's no stigma to renting. There's only your bank account.
All right, so the Rant Pack seems to be under the impression that, young people buying homes today, getting money from mom and dad. Is that helping things out, or is that hurting things?
I don't know what you've seen in your business. If I look at my last year, none of my clients had gifted money from someone else. So all of the people.
They must be an honest bunch, though.
Well, that, and I mean, I know of people doing it, but personally, in my last year, for example, none of them were gifted money. So I'm not sure if you.
We look at our percentage of clients. It's a smaller percentage that get gifted down payment. We do see from time to time an inheritance that comes in, but a lot of the time people are either saving money through a TFSA, or they're getting stock options from their company, or accessing their RSP to do it.
Well, that's another one that we should probably talk about as well. I mean, there is options out there. Canadian first-time homebuyers plan will let people borrow up to $25,000 tax-free from their RSPs. It's a good program. I mean, I utilized some of my RSP money to make my purchase. I wonder, though, with the fact that we have seen amortization rates cut to where they're at now, 25 years, is the government doing enough with that homebuyers plan to help people?
Depends on which way you look at it, because if for example, if you're going to amortize on, let's say, 40 or 35 years before,
Yeah.
and now you do it on 25, well, you're debt free that much sooner. So it's kind of forcing you of paying your debt down quicker. So from that angle, I think it's good. But obviously, most people at the end of the day, they don't look so much at the purchase price, they look at the payment. So the more pressure there is on the payment they can
The
afford,
monthly, yeah.
the more, I guess, resistance there'll be in the market. But I mean, at the end of the day, people are looking for that payment. So the more pressure there is, the
Well, let me ask you, Kent, then. I mean,
Yeah.
what do you think would help the market? What would help more people be able to purchase homes?
I think the government has made a number of recommendations through OFSI to put pressure for stricter guidelines for people qualifying. That has really impacted negatively self-employed people,
Sure.
people that want to buy an investment property. And I think that has been one of the key factors of why some of the markets, not Calgary so much, but outside, have slowed down.
I don't understand the motivation. I know you mentioned that they did want to cool the market. You know, we saw, like you said, the 40-year rates down to 25. Of course, that's going to cool things. Was there, I mean, that many people that were defaulting on mortgages that saw the
Actually,
need for that to even occur?
We get stats from our lenders,
Yeah.
and Canada is virtually at 0.4%, 0.04% of in the default, which is minimal.
And was there a
And
spike during this 35-year amortization period?
What it did was you've got a curve that has people that are renting that have to save for a period of time until they can buy. And when you look at the 100% financing, extended amortization, it just moved those renters out quicker into the market, which caused a surge. And now restricting it, what it's done is it's slowed down the market, and now it's trying to rebalance itself.
You know, and the reason I bring it up and I press on is because there's always talk about affordable housing, especially in Calgary. You know, I would argue nationwide. And it's policies like this that, of course, keep vacancy rental rates, you know, to the bare minimum and allow landlords and property owners to command top dollar for rent, which essentially eliminates that element of affordable housing. And in my eyes, that's a disservice. Susanna, what are your thoughts on that?
Yeah, I would agree. I remember, I think going back many years ago, which is dating me, but there were a lot of defaults in the late 70s, early 80s, and that was because of mortgage rates. So things have shifted in a really profound way. I mean, when I grew up and I was moving into the ownership market, mortgage rates were double digits. 12% was a good
of course, yeah.
was a good rate.
Recession, whatnot, yeah.
So you know, I don't know. I guess part of the question is how much should the government try to rebalance the markets? And I think Yannick made a really good point. It's like rent controls. You can't just rent control Toronto. You have to rent control Ontario. And that's going to apply to small places. The same thing in Alberta.
You know, I wonder. Yeah, see, and that's an interesting point. I mean, Calgary is much different than Lethbridge, is much different than Edmonton.
Toronto, Vancouver.
Absolutely.
Right, so
Absolutely.
You know,
perhaps it's time for some of these powers to be made at the municipal level.
That gets on the level of expertise and energy, and it becomes
It is
quite,
a thorough
quite,
conversation.
It
That's
becomes
true. That's
quite
true.
difficult with
Oh.
that. But you know what the government has done is they have a qualifying rate if you don't get a 5-year mortgage.
Yeah.
They qualify you for variables at 5.24% right now to factor in if rates go up. And yes, to your point on clients want to know what's my monthly payment, what can I afford, then what can I get, and yeah, if you have higher amortizations, you can get a little bit more, but it's not significant as much as you would think. You're talking in $10,000 to $50,000 more in a purchase, depending on your income side. So in the United States, 35-year amortizations, it's standard. In terms are 25 years, 35 years there.
How much responsibility lies with banks to ensure that sums that are lent for mortgages are actually within the financial ability of the lendee to pay back? Now, the reason I ask, I mean, I think commonly a lot of people are pre-approved for a large sum of money. Maybe might take 70% of their income to make those monthly payments, kind of setting them up to be essentially house poor. Of course, then I think, well, when you do need to upgrade your house, let's just be honest, right? We're a society of consumers. You buy a new home, chances are you're going to want to spend some money furnishing that home. the TV. I mean, mind you, these are personal choices, but still, I think it's commonplace they're being made. Or in the event of an emergency, you're going to need that money, but your house is poor because of your large mortgage that you were approved for that maybe you couldn't afford. So what do? You go to the bank for what they're handing you, which is a line of credit.